What concerns do you have about the valuations that some of these companies have reached lately?
Well, it's very interesting. You raise a good point. The valuations are sky high, and we are seeing a lot of investment going into this space. If you look at this year alone, the number of billion-dollar valuation companies, number of unicorns, is at a record high level, and by far the biggest segment, whether that be pharmaceutical, automotive, is actually fintechs. So it's receiving a lot of investor attention. We also see specifically going into fintechs. You look at Q3 of this year, the amount of funding going into fintechs by Q3 of this year was double versus the same period last year. So there's a huge growth in that sector. And look, with high valuations come high expectations, and we do think that some of these are going to be very successful. Others will not be. And it's interesting for us as a bank. We do see fintechs being a little bit more disruptive in the consumer space. In the corporate and institutional space, it's a slightly different story. It's much more about collaboration and enabling the big banks. And I think those fintechs are attracting a lot of attention because they've got a much quicker path to revenue, and then further and supporting those valuations if they can enable these big banks. So we, as with many other banks, do partner with these fintechs so that we can take the niche technologies that they've developed and deliver them to the market in a quick and efficient way. And ironically, that's also what a lot of our customers want. They like the capability, but they prefer it to be delivered under the umbrella of their trusted relationship bank.
And Matthew, if you look at the strategies for at least a handful of the biggest unicorns in the fintech space, they're not rushing to exit, which suggests some confidence in the C-suite by executives. They've got plenty of money from private means of private equity companies. And if you look at what they're doing, it feels as though some of them are just stealing business that would have been traditionally credit card business or would have just been cash transactions. So what do you make of the new business? I mean, one of them I spoke to was in the space of connecting up payments for small businesses that simply would not have been in that space before. They would have wandered off to a bank, got some cash out, everything would have been transacted pretty much in cash or a credit card, not over the internet.
Yeah, look, it's a good point. I think when you think about the consumer experience, and we all expect a much easier way of doing business and interacting for our financial lives. And just think about the big step forward that you will have seen with the bank that you use every day for making payments. And when you raise that expectation with the consumers, that naturally bleeds into the corporate and institutional space as well. So when we look at our clients, they, particularly the larger corporate clients, they are consumers themselves, and they are looking for more frictionless ways of interacting and making payments, for example. Having said that, as I said before, where we're seeing the real disruption from fintechs, it's very much in the consumer space, maybe small business. Once you get to the larger companies, they're really looking for their banks to provide those types of services and solutions, because typically they'll have a treasury policy that's quite conservative and has rules around what sort of counterparties they can take risk and exposure against, and normally that's more limited. So it's better to get that solution from a bank.